Ladies and gentlemen of the crypto space, we're live on a Friday at 11:29 a.m., February 5th, end of the week, and this was a heck of a week. There's some serious stuff going on, boys and girls. We need to know about it. Not enough people talk about it. Clearly, folks on the legacy financial system, the old school participants, they talk about it, and they're incredibly astute, and they're invaluable knowledge that they provide to particularly persons like myself, but just a lot of them are on social media, definitely on Real Vision. They're just brain dumping, just incredible views, just a significant opinion, just foresight, experience, knowledge that's beyond mind. Some folks, Lynn Alden goes back years and just does some relationships with some of the most interesting large-scale events that have occurred over the last 100 years. And that's downright fascinating, boys and girls. And in the end, we all have to tell our own stories. We all have to paint our own pictures because we could hear the stories of other folks, but unless we digest that shit and we really understand it, what are we doing? You can't follow other people. You can't do what other people tell you. You have to do what you conclude to be the best thing to do. And in that consideration, in that respect, we got to hear as much information as possible, and we have to do our due diligence. And even I myself am always encountering and engaging in a learning experience to evolve and mature my ideology, and this affects the choices and decisions I make. So I share that experience with you, boys and girls, because time is now. Let's turn the let's turn Main Street into the smart money. We're going to get ahead of the pack because I know for a fact that the legacy financial system is filled to the brim with dumb money. They're not as smart as people think. People make money that are not smart. They do completely irrational decisions. They're chasing the most insane assets, and sure, they're making billions of dollars, but there's incredible opportunities that we are exploring and that we talk about on this stream when the great value reallocation inevitably occurs. So we're going to position ourselves in front of that massive herd of institutional money that is chasing equities to sky high prices, and it's going to be much easier for us. We do not need to chase. We do not need to try and jump on a moving train. What we're going to do is we're going to stand on the platform, and the train's going to come to us. And that's what we do here on this stream. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social good. Uh, I'm distracted. John's texting me. Sorry. Sorry, 1 second, guys. And, Change Angel, the non-custodial swap exchange for social good. Stop depositing on its exchanges. The non-custodial DeFi or nothing at all. I totally just butchered my normal intro. I'm distracted. There's way too much data going on right now. Absolutely incredible. Macro Crossroads and its effects on the crypto space. We have to understand the big picture to understand what the heck is going on in the crypto space. Now, I talk often, before I get to the main screen, I talk often, obviously, about the equity space, and I'm a participant in the equity space. I sure as heck do not chase those silly, disturbing, disgusting, inflated assets. And that's such a contradiction emotionally because I love my Tesla, but I would never, ever in a million years allocate value to an asset like that. Ridiculous GameStop bullshit. Anyway, let's pop it over to the main screen and see who's in the stream. Lights in the house. Mark's in the house. Let's build that arc. I'm trying my best. Stops in the house. Crypto Chick, always a pleasure. Lewis, but while some large cap and growth stops seem lofty based on traditional measures, they may also grow into these valuations. Yeah, that is true, and that's exactly what the macro indicators are showing. Digilight, things are happening so fast. I can't keep up. I have work to do, but I have this to do, and I have family to do. I'm all over the place right now. Andy, hit the likes, hit the likes. 20 people in the stream, 8 likes. We can do better than that. Derek's in the house, always a pleasure. Vincent's in the house. Lawrence is in the house, always a pleasure. Igor, what happens right now with King Dollars? Yeah, let's get into that. Pellets, my man, always a pleasure. So I got the DXY up. So what is going on? You know, everyone knows, well, most people know about the bullish dollar theories. I myself absolutely think they're reasonable. They're logical and rational. But Yeah, it's important to position yourselves in front of a trade, but I firmly believe in what I talk about. The trend continues until it stops and reverses. We only make actions when a story changes. So right now, this is why I'm so much on edge. We had the bullish break of the falling wedge, but we had smacked right into the 100 SMA on the daily. Well, not right into down here, but this is quite fascinating. These two blue circles, and that's significant. And right now, really, the question is whether it falls back into the wedge. And frankly, the RSI looks like the RSI and the Stoke looks like that is not an impossibility. So, what does this all mean? A bullish dollar is typically destructive of or induces extreme depreciation in asset markets. So what we've experienced in the last week is a massively bullish dollar, but the bullish dollar has been extraordinarily muted by the effects of a steepening yield curve. And my eyes are on the weekly, the 100 SMA on the weekly, and that's why we're just at a crossroads, and that's sparked the title of today's stream. A steepening yield curve is seen by traditional macro investors as reflation and signs that the economy is strengthening. Stephen Van Meter will talk about this to really lock in reflation. You need to see a rise in short-term, short-dated bond yields as well, and that is not occurring right now. Sorry, USO2, no. USO2Y, and that is not occurring. This shit is flat. It's riding support. So we have contradictory information. Bear in mind, steepening yield curve. If the short end of the curve goes down, and the long end of the curve goes up, that's a steepening yield curve. So there's so much contradiction going on, especially with the dollar, especially with equities markets, with the amount of money they're printing. What the what is going on is an extraordinary distortion of historic trends that it's blowing normalcy out of the water, and it's putting people in a position they don't necessarily know how to respond. And what we're experiencing is basically new patterns, new trends, and that means we're on high alert for either trends to match up with historic normalcy or trends to deviate. And that just means you sometimes have to respond quickly. I mean, this is crazy. Look at that 100 SMA, bearish cross of the 200 EMA on the weekly for the 2 year. That is so bearish. Dare we say the 50 SMA with the bearish cross. If this 200 SMA hits a bearish cross, what the heck does that mean? I mean, clearly it's consistent with the steepening yield curve if this breaks down, but then again, we go back to the US 30-year, and then what does that mean? Is this going to smack into the resistance? I mean, really a wick right above the 100 SMA on the weekly. What is going to happen if this breaks up? Interestingly enough, I could tell you a couple of things that are obvious in behavior based on the recent relationship to stuff that we experience. If this thing rips up to the upside, DXY, um, and the dollar continues to be, horizontal. Maybe it holds the breakout and turns resistance into support, and it trends horizontal. We're going to have a very bullish equities market. If this breaks down back into the wedge and we see some bearish red candles, we're going to see an equities market that's absolutely on fire. So what we've seen in the data is that the steepening of the yield curve, the rise in long-dated bond yields has muted the depreciative forces that the bullish dollar has shown. We've seen some craziness, 600, 700, 800-point drops in the equities markets in the face of, a relatively small dollar move. But we haven't seen that. We did not see that 2 days ago when we had the 600-point rip to the upside. So that's what's playing out. These are the correlation and the inverse correlation that I'm seeing between these assets. And this all has a massively complex story with the crypto space. I mean, you have the exit fiat narrative, you have the risk off narrative, you have what's going on with Michael Saylor and institutions, you have what's going on in the DeFi space where they have built and are building the completely analogous infrastructure that literally does what the legacy financial system does. That's what's occurring. 353 Gwei, whatever the instant transactions are probably 500 Gwei right now. Let me take a look. You're talking about hundreds of dollars of transactions. But why it's going up, yeah, folks will say that that's not sustainable, that's never going to work. It's working. And when you see Gwei go up, it means the system is on fire and it's working and it's exploding with activity. Got to remember, I know the vast majority of persons have relatively small positions or relatively decent sized portfolios, but there's 45 million millionaires in the world, and that's just like the low end. You got the hundreds of millionaires and the billionaires and then the corporations and then the fund managers and the hedge funds. There's people throwing around dirty money and they don't care about $500 transactions. If they're going to make $50,000 on a trade, they don't care about $500 transactions. And that's why you're seeing Gwei gas prices this high, because this technology and this network is proving to be extraordinarily effective, facilitating lending and borrowing and leverage and debt positions and options and synthetics. It's literally, we are watching the deprecation of the legacy financial system in real time. And this goes into a tweet that I mentioned earlier. When do we start to think about S-curve adoption versus a bubble? And, that's an extraordinary topic that Willy Woo delves into. And he obviously has said S-curve adoption at this point for Bitcoin, but I'm so tempted, if not confident, really close to confidently saying that DeFi is just on the road. And what's so fascinating is DeFi is, mainnet, so to speak, deployment is about a year into the space. At the beginning of 2020, Uniswap was doing peanuts, 20K a day, and Curve was doing nothing. It wasn't even on the radar. And all of a sudden, this stuff is doing whatever, a couple $1 billion a day. And that's just extraordinary. And that is what I like to talk about, monetary velocity. I argue that the monetary velocity in the DeFi space is absolutely vertical, whereas we have empirical data that the monetary velocity in the legacy financial system is imploding. Truth be told, that the calculation for monetary velocity in the legacy financial system has, M2 supply as the denominator. So it's not directly comparable to what I'm seeing in the DeFi space, but basically conceptually is why it has caught my fancy as a comparison, as an analogy. The lending and borrowing in the DeFi space is vertical. The lending and borrowing in the legacy financial system has basically collapsed, definitely at the retail level, and probably to a large extent at the corporate and institutional level. And that is just crazy. That is just crazy. Let me see what's in the stream. What am I missing? Um, Crypto Monk, what a time to be alive. This is extraordinary. And I'm trying I need a cup of tea or some shit. I'm trying my best to stay calm, cool, rational, and collected to make rational choices. But we got some stuff going on with Rook. I'm trying to keep my composure. We got all this stuff going on at the macro level. Bitcoin looks like it's positioned to absolutely deprecate everything. This is a fat cup and handle pattern, but bear in mind you got the rounding top and the stoke. MFI is at the top, so funding is high. Typically, you see a very bullish breakdown when you have a reset of all the oscillators. So MFI is a bit high, and we'll see what happens. You don't know what it's going to do until it actually does it. And you can only speculate as to what it's going to do. And this is an extraordinary bullish pattern. So the way you look at something like this is the trend continues. This is bullish. We are extremely bullish, independent of what the oscillators say, until the trend is invalidated. So this trend becomes invalidated when you get to the lower low and you break the handle. And that's exactly what I'm looking at on Rook. And man, let me just show you right now. This got dicey. This got stomach inducing anxiety right there. So I've held, and I have probably one of the largest positions of the entire community. I mean, I could probably tank Rook at this point like 10, 20%. And just this is just nerve wracking because the problem is that there's a break to the downside. Other people are looking, and this is an invalidation of the falling of the cup and handle, and that would likely trigger a cascade of depreciation. And then you'd have to wait for a new trend formation to emerge. But you're not going to sit through a 50% depreciation event, and the liquidity's there in the AMM and Uniswap, so you have to liquidate. And what you have to do always, folks, is make the rational decision. You have to protect your gains, and you have to follow the data, and you have to make rational choices based on what the data is saying. A trend continues until it stops and reverses. A trend continues until it's invalidated. And right now, this is one of the most ridiculous trends, a cup and handle, absolutely insane for Bitcoin on the big picture, and basically the same picture right here for Rook. That is a absolutely massive cup and handle dating back 3 months to, what is that, end of November, when it had its absolutely massive rip to the upside. But look, this is a perfect example where you're going to see a lot of when we start to get to the top of a bubble. We're not in that right now in the crypto space. That's firmly my opinion. Right now, what we're seeing is healthy bull market behavior. You see a rip to the upside. You see the liquidity shuffle where folks in profit are taking those profits. Price comes down. Sellers get exhausted. New buyers step in. A new cost basis is established, and basically that's the bull market, and that's the staircase pattern that everyone knows: up, down, up, down, up, down. And this is not that. Here, sure, fine. This could have been a staircase pattern. This was a base forming, so this was a reset of the cost basis. But when you have bullish moves like this, when you have candles like this, what goes straight up comes straight down. So this is basically the top pattern that you can see across the broad crypto space when retail really enters, and that's not the case. And that's what's so fascinating. As Crypto Monk said, "What a time to be alive, because this is an extraordinary position to be in the crypto space. You are extremely early, barring a risk-off event, barring a macroeconomic or crypto-centric risk-off event or trend change or story change. The trend continues until it stops and reverses, and right now we are in bullish mode across the entire space. You will know that you're getting towards the top when stuff starts ripping 100%, 100%, 100%, and retail is just doing completely irrational things. It rips up like this, and you see these just massive candles that go straight up. You don't see the consolidation, the change of hands, the change of the guards, somewhat so to speak, the establishment of new higher cost bases. And this is a perfect example of the irrationality we will see when we hit the top. We're clearly, confidently not there yet. What am I missing? With the constant news flow, hedge fund managers opening up crypto funds, do you think we could see a liquidation event in the macro space given the transition? Or are they hedging macro funds? So that's exactly why I stare at the 30-year and the 2-year. Pretty much so much data, and I'm not overwhelmingly bond-centric, but the 2-year and the 30-year give me a sense of the curve steepness. And that has significant meaning compared to the dollar bullishness. It's had the muted depreciative effect, or induced, and it has muted the depreciative effect of the dollar. But we're literally hitting resistance and sitting on support, and we have the falling wedge for the dollar, and equities markets have the massive Sven wedge. How sustainable is that? Can the most epic ascending triangle you've ever seen, or the ascending wedge, rising wedge, break up? What does that even mean? So I just, that I'm telling you right now, we're at a significant crossroads. Either 30 years break out, like straight up above the 30-year yields, break out above the 100 SMA on the weekly, and maybe as Stephen Van Meter talks about, the low end of the curve, the short end of the curve, starts to pump in yields as well, and we have a complete consensus across the intellectual space that we have reflation occurring. So right now it's speculative with the long end of the curve with rising yields. The gold bugs are going to say that's completely indicative of reflation. We have equities markets that, as Lewis mentioned, a lot of folks are thinking that this is the start of things, and this is what they're thinking about. This is the data that they're looking at. If the long end of the curve breaks out, we have a really steep curve, and the dollar maybe gets extremely bearish. Yeah, we're totally heading in the direction of a reflationary event, and equities markets are just going to keep screaming, screaming, screaming higher. And the contrary is also the case. Hence the title of the stream, an absolutely ridiculous crossroads. Pellets, if you buy Aave at 60, you'll be selling to someone for. Will you selling some for BTC now? Value rotation, big cap incoming. I don't know. I myself have a fair amount of Aave that I bought at relatively cheap prices, a small amount relative to larger positions of my portfolio. But this thing's sitting at $516. Bear in mind, I stake it. I have it in the security module. I don't really care about short term. I'll hold this through a bear market because in a couple of years, Aave's probably going to be one of the largest organizations in the world, dealing with hundreds and hundreds of billions of dollars, if not probably trillions of dollars by the time the Federal Reserve and M2 supply is done. And that's it. That's just the bottom line. This is long term type stuff, boys and girls. Cryptic girls in the house. Always a pleasure. Captain Weber hooking it up. Hit those likes. 35 people in the stream, 18 likes. We can do better. Mark McNeil, always a pleasure. SD, gas too expensive to take profits. I would pay an arm and a leg to make a trade if I need to. You don't need to make trades unless you need to. You don't need to make trades unless the story changes. That is all that matters. If this starts to break down through this green line, yeah, I'm getting worried, and I'm going to have to look at the order book and see what other big players in the space are doing. And if Bitcoin breaks up, that has a notable effect on the altcoin space because that encourages people to liquidate those altcoins for Bitcoin to participate in the breakout. Now, bear in mind at the GWAY prices, you're talking about probably $100, $150 transactions on Uniswap. And I'm lucky because I have a boatload of Chi for 1-inch exchange, which significantly mitigates transaction costs. What'll be a $400, $500 transaction on 1-inch exchange is probably $100, $150 using Chi, which I have that I bought at at 20 Gwei, 30, 40, 50 Gwei. So I like have bought $400 worth of Chi. It's worth like 3 grand right now. Absolutely crazy. So Chi actually mirrors Gwei. So when Gwei goes up, the value of Chi goes up. It's basically tokenized gas, which is crazy. So if you see gas prices at $20, Chi, and you want to make a trade, Chi's a great buy if you think gas prices are going to be 300, 400 Gwei in the future. And that's how you trade Chi, for instance. Whew. Charlie G's in the house. Always a pleasure. Our one Rook giveaway winner. Much honored and much deserved. Ben's in the house. There must be a lot of people not taking profits because of the sky high gas prices. No, no, that's not the case. They're not taking profits not because of gas. They're not taking profits because the market's a ridiculous bull. The vast majority of players, the large asset holders, they don't care about $400 or $500 transactions. These people have 50, 100,000 to a quarter million, millions of dollars worth of these assets. You look at account ownership for stuff like Badger, that's absolutely flying off the rails. It's people with millions of dollars worth of these assets. They don't care about $300 to $500 transactions. And these are the market makers. These are the people that shape the markets. And to really, that's another interesting thing. And that's like 0B1X. So on Twitter, follow this person. This is a market maker. Was it 0xB1? Yeah, follow 0xB1. This is a perfect example of a relatively altruistic market maker. This boy's throwing around like a $500 million in the DeFi space. And projects get off the ground because of this account. Um, and it's a story I'll start maybe another day. But most of the DeFi projects, when they're small, like sub-$1 million market cap, they get off the ground by intention, and the market is crafted and created by these large market actors. These assets would never get off the ground. It's literally like a tiny little fish being dropped into a sea of sharks. So the only way these small DeFi projects get off the ground is if a shark um, says, "Hey, little fish, come with me. I'm going to take care of you." That is the analogy that actually is the case. So this is an altruistic market maker. These boys literally can make or break assets, and they have proven time and time again they have made a good part of the DeFi space what it is. Absolutely fascinating. Um, uh, the security module, not model, crypto check. So that's how Aave handles its staking. People stake in Aave, they experience risk, and they get a yield from the treasury. Assets they minted when they converted from Len to Aave. The security module is used in case of a security event. If there's any event, any loss of value, up to 30% of staked value in the security module can be liquidated to attempt to account for the security breach in the Aave platform. Aave just ripped past $5 billion in TVL. It's one of the most important assets in the crypto space. It's one of the most reliable. It's one of, frankly, I would go as far as saying it's probably one of the most institutional at this point. 1 inch is straight up institutional. Uniswap, I don't think so. I think they're more, they like, I think they're heading less corporate, more decentralized, more like, grassroots organization. But these boys are throwing around billions of dollars at this point. They have probably one of the largest treasuries. They don't have a profit sharing program. They probably have billions and billions of dollars at this point and are building an organization that's not based on venture capital. So their approach is very different. Um, Curve is going to be self-sustaining as well. Just where do you start and where do you begin? You're seeing the emergence of literally financial infrastructure right before your eyes, and the legacy financial system has their head up their ass. They have no idea what they're doing. Yeah, they're making money in the equities, doing whatever they've done for the last 50,000 years, and they have no idea what's coming for them. They literally have stuff that has a capacity to completely deprecate and replace and be evolutionary compared to the systems and tools that they use on a daily basis. What am I looking at? Let's go through the chat. Lewis says the long end of the curve still not does not produce yield that legacy managers clients need. This is a fascinating point. So what does this mean? In a risk-off event, the yield is useless. You got REITs and other equities that are producing comparable, if not superior yield. So in a risk-off event, sure, bonds are a flight to safety, but they're a temporary storage vehicle. Nobody's going to keep $50 billion in bonds, considering the debasement of the currency. They'll be losing millions of dollars worth of value daily. So this goes into the great value rotation hypothesis that I have. So in the case of a massive systemic equities market risk-off event, if tech equities collapse and crash, sure, there's going to be a flight to safety to bonds, probably because it's an extremely liquid asset and it's easy just to dump value into them. But the value is going to be redeployed historically quickly. And then the question becomes, as I like to tell everyone, how to think about value management. You want to put your value right now to where those big boys liquidating 50 bill are going to want to deploy their value after a risk off event. And where are they going to deploy their value to? They're not going to redeploy their value to tech equities. And sure, some of them will. Warren Buffett's probably going to buy companies, entire companies outright, or hostile takeovers. But the money's going to be deployed to the assets that depreciated the least during the event. Because an asset that depreciates less than other assets is outperforming the other assets. Therefore, there's probably going to be a massive, massive historic value rotation in the case of a risk off event to value stocks versus growth stocks. At least that's the terminology that those old people throw around. Charlie, I thank you so much. Yeah, yep, you're talking about. I know what you're talking about. You are appreciated. Everyone in this stream is appreciated because I do this for both of us. I do this for me because it allows me to talk about this shit. And there's a reason for me talking about it because I know it's helping people to understand what the hell they're doing, why they're doing it. You're not gambling. When you're dealing with knowledge and you have these kinds of tools, you're actually able to make reasonable, rational decisions. It's not like I posted on Twitter the other day. Some dude pumped $100,000 into Doge, and he private messaged me. I saw it 2 days later that he was down 50 grand, and he doesn't know what to do. He doesn't know what to do, and that's so tragic, and it's upsetting to see. I couldn't do anything about it, and frankly, I wouldn't do anything about it even if I got to that message in time. I'm not going to tell anyone to buy or sell anything. I'll mention what I do, but my goal and my purpose and my point is to provide tools and resources and knowledge so you folks could actually make these decisions on your own. Because I guarantee you, if you make a couple of mil and you did it based on your own decision making process, that is not only financially life changing, but it's also emotionally life changing. Um, can I ask you to explain limit order put through Keeper Dow? Yeah, yeah. So let's do Keeper Dow. 12 o'clock. Let's do a couple minutes. I'll go over today. So Keeper Dow released an MVP DEX, the DApp, interacting with the contracts that they're basically developing in real time. It is so premature and it's MVP. It's like ChaosNet for Ren, if folks remember that stuff last year. Um, you play with it. It's a limit order. You put in a price, you put in a time duration, and if the conditions are met, a limit order is executed. Bear in mind, with the Keep It Down system, it's not just a limit order with regard to price, it's also a limit order with regard to arbitrage opportunity. So you probably want to do, was it metric? Metric exchange. So these boys have integrated Keeper DAO, which routes through 0x, and that's probably why 0x is absolutely ripping face. Aside from the fact that their growth, their volume growth in the platform is ballistic. Um, yeah, they're underlooked at and underutilized. Actually, they've been utilized, and that's where their growth is ballistic. The only reason nobody sees their growth, I'll digress for a second. Um, check this out. I posted this on Twitter the other day. It'll take a second to load. Oh, no, let's go by month. So look at this. So this is the monthly volume chart. So Uniswap is obviously kingpin. But look what happens when you start to uncheck everything and look at look at 0x, which is this little sliver at the top. All of a sudden you realize that 0x is ballistically increasing the volume going through the exchange 100% month over month. That's extraordinary. And it's completely muted, muted by the sheer size of Uniswap. But this is why we dig through data to see what's going on. And as you can see here, 0x is absolutely killing it. I think they're at the top of the list, maybe still. They were at the top of the list for a while yesterday. Sort 0x, 94%, 177%, 7 days, and that is exactly why they're killing it. They might be killing it because of Rook as well. Keeper DAO is going to execute their trades through 0x because their limit order system is the most gas efficient in the AMM space. And that is massive when you're talking about a platform. Keeper DAO is completely designed to produce a next level AMM experience where you can actually trade with minimal slippage, no gas, where the taker pays the gas, and it would literally flip the AMM space on its head. And that's exactly what Keeper DAO is positioned to do. It's positioned to flip the entire AMM space on its head. Now, clearly, you got EIP 1559, and that's an entire topic unto itself. I don't want to get into it right now, but I think Keeper DAO is not only synergistic with it. I don't think EIP 1559 is going to go through because miners will incur significant financial loss as a result, so they're not going to be incentivized to actually execute the node upgrade and the mining software upgrade. So this is the game in town. I get worried because I tell you guys that You got to protect your capital. So there's, a risk-off event, whether it's macro or crypto-centric, a break to the downside could easily trigger a cascade event where you have to liquidate because you have to protect your value, and boom, you'll have a 50-60% retrace, considering all you have here is the support flip resistance. But as I said before, the trend continues until it stops and reverses. The trend continues until you have trend invalidation. And right now, this thing is on trend with one of the largest, most incredible setups I've ever seen. This is a massive cup and handle. And if this rips to the upside, and we're still on trend until the bottom of the handle is breached to the downside, and probably a candle body close. And there's always so much wiggle room in these damn charts that it's hard, very hard, and to make the perfect. You never make the perfect decisions. You're going off your gut. You're going off a lot of instinct. But look, you could have a rip to the downside, a big fat candle body down, and then the candle body close literally at support. And then you'll drive yourself nuts if you liquidate it. But bear in mind, you could also experience a 30% loss in a wick down. So there's no perfect way to do things. There is always a degree of risk and uncertainty in things like this. But you can't argue with some of the rules of the road. Particularly, the trend continues until it stops and reverses. Don't take action unless the story changes. Don't take action unless a trend is invalidated. That is some crazy sauce right there. I'm not with these Doge tweets because people might take it as a hot tip. Doge. Oh my God. I wouldn't touch Doge with a. Captain Weber, metric is up 650%. Yeah, look what's happening. So, I mean, 0x is up, metric is up, but Keeper Dow and Rook are not. Maybe it's being suppressed. Maybe it's not. You get into conspiracy theories, and what I'm a fond of theories. Conspiracy theory is just a theory, and then what you look for is data either substantiating or discrediting said theory. You look for invalidations of theories, and that's exactly what we talk about here on the stream. I gotta check that site out. Yeah, Lawrence, bullish div on that Stoke RSI. And which one on? Yeah, this thing looks crazy. You got bullishness here, bullish on the MFI. I mean, just everything's bullish about this thing. Let's take a look at Bitcoin real quick. We'll wrap up the stream. I mean, look, it's dipping down, it's wicking, so you got support on the short-term moving averages at the top. What is this, the 4 hour? Yeah. It's hard to really concentrate on stuff like work at this point because this stuff is fire. I mean, just looking at, you have to flip through the 30 or the 2 year bonds. You got to flip through the DXY. You got to look at the equities markets. You're looking at news headlines as well. And clearly, all this ridiculous technical data that's going on in the crypto space. Top it off, you have to flip through CoinGecko to see basically the aggregate price action. You got to check in on the Keep It Out Discord to see what's going on there. You want to keep an eye on social media, which is clearly what I do quite frequently. And it's a lot of data, and my brain hurts. I'm going to go take 2 Advil. Charlie G, what's the 0x? What is that 0x? 0x is it's old. ZRX, 0x protocol is old. That's like 2017 type stuff, boys and girls. It's like Bancor. Bancor and 0x, just because they're not at the top of the AMM spectrum, are not to be neglected or discounted. And Kyber, these boys are tiny. They're doing tiny volume, and tiny volume is like $100 million a day. So I'm just saying that's crazy and quite meaningful. And this Canada Dry, if this was diet right now, it looks really good, and I would drink that bad boy up. Okay, ladies and gentlemen, the crypto space, 33 people in the stream, 23 likes. It's time to do a little bit better. Thank you very much. 12:08 p.m. Friday, February 5th. As always, I thank everyone for joining me. I wish everyone a wonderful weekend, and we're going to be doing this all next week because that's what we do. Y'all have a good day now. Peace.